Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for February 3rd, 2019. I hope you guys and gals are having a great weekend. And before I get into the charts, before I get into what's going on this next week and kind of recap what happened last week, I wanted to make sure that if you haven't tried out ForexAnalytix, sign up today. Just click on the button. It says sign up today. It's only for $1. Okay. Also, if you want to see what ForexAnalytix is all about, you can click the video right here in the middle of the web page. You can see a demonstration of what ForexAnalytix is. And once you try it out, download the mobile app. And you can go to the Google Play Store, the Apple Store, and download the mobile app or to your iPad or tablet. And this way you have all of our analysis on the go. It's a great way just to be part of our community, have all this analysis streaming to you throughout the course of the trading week. And like I said, join the ForexAnalytix community. What do you got to lose? $1 for 10 days. Okay, so we're going to talk about, well, first of all, I actually considered taking the recording from last week, changing the day, and putting it on this week, and then just leaving it at that. In all actuality, we're really range bound, and there's not a lot happening. There is a lot happening, but as far as price action in the currency market, there isn't a lot happening. If you look at the euro and and basically what's happened over the last week, I mean, we've gone a little higher. I expected that last week. I expected that the euro was going to continue to grind higher after that false breakdown below this channel at 113. We've done that, and we've gotten to 115, but it hasn't been an easy road. It hasn't been a clean move, and frankly, if you look at the euro, it's range bound despite the jobs report and the FOMC. I mean, the euro is a little stronger, the dollar's a little weaker, but I don't have a compelling argument to be aggressively long the euro or aggressively long the dollar. You look at the way the Fed chairman basically gave us the Powell put. He came in pretty dovish, and you can argue that the Fed chairman said, well, we're going to, or you could argue that the Fed chairman is bending to the demands of the president and is being more dovish and a little bit more cautious. But frankly, U.S. data is starting to soften a little bit, and I don't believe there's any reason for the Fed not to be a little bit more cautious at this point in time. But you look at the dollar index, and yeah, we're kind of middle of the range. I mean, you look at the 618, we're right at the 618, we're right at the 200-day moving average. And frankly, I have to say, as long as we hang out above 95, I don't really have any reason to be bearish the dollar. And even if the dollar broke through 95, I mean, would we just channel or target channel support down here at the 78% retracement at 94.60, 94.50? It's hard to be extremely bearish the dollar, but at the same time, I don't necessarily want to be bullish, because if you look at the series of, we've had lower highs and lower lows up until right now. We're now creating a higher low, but we could still, like I said, go out to the 78% retracement. So there's no real reason for me to be bullish either. So I look at the dollar, and I think the best way to look at it is going sideways, and you probably are better off trading it as a range. So in other words, you might want to sell rallies on the dollar index, maybe back up to 96.50, and you might look to buy dollar dips down to 94.50. And I wish I could sit here and go, oh no, the dollar index looks like it's going to 100, or the dollar index looks like it's going to 90, 92. That's not the case. Or if I'm looking at the euro dollar, I can't really look at the euro and say, oh, definitively at this point in time, I feel like it's going to 120 or it's going to 109. I think we're range bound, and it's unfortunate that it's range bound, but it is what it is. So as traders, we have to kind of take it with a grain of salt and kind of trade around this this as and look at it as those are our opportunities. I would look at the euro as a move up to 115 as more of a selling opportunity, and a move down to euro 113.50 is more a buying opportunity. And unfortunately, we are in the middle of the range. Now, that's the euro. Now, are there better opportunities in other pairs? Absolutely, I believe. Now, if you look at the cable, you know, we're hanging out above the 200-day moving average, and I have to admit that the pound is holding up pretty well despite, you know, the constant you know, shooting down of the Brexit plan of Theresa May's. The pound is actually holding up relatively well. It hasn't sold off. I figured by now that the pound would be trading well below 130, and we could probably be trading down at you know, like 128, 127.50, but it is holding up very well. So, you know, is that a product of pound strength, or is it a product of dollar weakness? Well, you might have a little bit of a mixture there. As far as the cable goes right now, you know, I don't know what to do with it. 2 weeks ago, it was a pretty clear trade to me when we broke above 130 and we traded it all the way up to 132. That made a lot of sense. Right now, you know, it's a little iffy. And like I said, I think there's better opportunities out there. So let's talk about some of those. Now, if you look at the Aussie, all right, the Aussie dollar, we do have the RBA this week. Now, the market's pretty bearish and expecting a more dovish RBA because of, you know, the ongoing trade war between China and the US, and I think the market is pretty expecting more of a dovish statement. Maybe, you know, when you're talking about the RBA, that they might downgrade its growth and inflation forecast for 2019. But are they going to be dovish enough to really you know, get the market excited about further downside in price action? I'm looking at the Aussie as it's knocked its head up against the 200-day moving average, but frankly, if we can get above the 200-day moving average, we might be targeting 74 in the Aussie. And is that going to be, again, is that going to be a product of more Aussie strength, or is it going to be dollar weakness? I actually believe it's going to be, if anything, it's going to be Aussie strength. So watching the RBA, which is, by the way, early in the week. It is Monday night in the United States or Tuesday morning if you're in Asia that the RBA meets. So keep that in mind if you're trading Aussie dollars at all whatsoever. I don't have any Aussie exposure, but like I said, I'm really watching the 200-day moving average very closely, and above 73 cents in the Aussie dollar, I think there's an opportunity to at least test these highs from December. Okay, now let's take a look at the Kiwi. The Kiwi has also been fairly resilient. If you look at the Kiwi dollar, let's go over to the daily chart. I've pretty much been watching the Kiwi, you know, all week long, and I've been shorting the New Zealand Canadian, excuse me. I've been shorting the New Zealand Canadian, and even though the New Zealand Canadian came down on Friday, which I was short Friday morning, so it, you know, I made a little bit of money, I still looked at the Kiwi dollar and said, man, this thing is super resilient, and it continues to be pretty resilient. And frankly, you look at these highs from December or November, excuse me, we're not too far away from them, and if we get above like 69.40, we could start squeezing up towards 70 cents and maybe even beyond 70 cents. And this is a 50% retracement. You can see it right here. Okay, it's 50% retracement at 69.30, and that's kind of holding us up. But again, if we break above those recent highs, we could start targeting 70 cents. Now, it's not just the Aussie and the Kiwi that look strong. Let's take a look at the Canadian dollar, because the Canadian dollar has been performing really well. The dollar Canadian has looked extremely weak. Now, we do have a bear flag pattern, and it's this is not my chart, so let me go over to my specific chart just because I think it illustrates the bear flag pattern a little bit better. Okay, you can actually see that the bear flag pattern targets below 129. Now, I don't know if we're going to reach completely for that target, because I look at the this, you know, longer term channel. A big support is going to be at 130. 130 is a big round number. It's a big psychological number for the market. We are below the 200-day moving average, but we also have this, you can see right here. You can see this, let me take that trend line. I'm going to make it dotted for you guys, or dashed. That's dotted, but you can see this trend line from the lows back in January. Okay. Oops, I'm sorry. That was lows January 18, 2018. So this is a 1-year trend line. That intersects almost where we're at, 161% extension of this last move higher. And you know, even though we're just below the 200-day moving average, we're coming right into that support. So the dollar Canadian could find support between this, you know, 130.50 and 130. But there still is a little bit more downside there, and you know, we could see a little bit more dollar strength, or excuse me, Canadian strength. And that's why I look at the Aussie and the Kiwi the same way, and I looked at them and said, you know, there might be a little bit more upside in those two particular pairs as well. Now remember, Canada on Friday has their employment report. Okay, so that's going to be important as well going into the end of the week, especially if you have any Canadian exposure. At least one last currency that I do want to discuss is the peso. I am trading the US dollar Mexican peso to the long side. Pemex is, you know, the Mexican energy company, and they're in a bit of trouble. A lot of downgrades, and it's going to be interesting to see how the government supports Pemex moving forward. But the Banxico does have their interest rate decision this week. They have a couple new board members or committee members that are joining, and so the market is not expecting Banxico to move on interest rates. But the thing about the US dollar Mexican peso is we are in a very tight trading range. Okay, very tight triangle here. And matter of fact, let me take you over to my charts really quick, and I want to show you that we have a nice little, you know, trend line. You could say it's a triangle pattern that's very, very well developed here. And the US dollar Mexican peso below 19, or, you know, 18.95 is, this would be very bearish. Okay, this would be very bearish right here. Okay, that would be a bearish breakdown. We would probably target 18.50. The flip side is we get above 19.20, and then, you know, we're going to target the 200-day moving average, and, you know, probably stay fairly range bound. Now, if you look at like a longer term, I mean, I'm really giving you more of a broader view of the US dollar Mexican peso by zooming out like this. You're seeing, you know, all the way back to 2016. You can see this is just a big consolidation triangle type of pattern, right? And frankly, I think the risks are more to the upside here than to the downside. So I think that you got to be watching for a potential upside break above 19.20. Now, one of the things that would help the US dollar Mexican peso going higher is with equity market weakness, and that's one thing that I'm a little skeptical about. So the last chart I will show you today is going to be the S&P. Now, I'll talk about that here in just 1 second, but typically emerging market currencies will weaken if there is weakness in the, you know, the broad markets, whether it's the S&P, the Dow, the Nasdaq, the DAX, the Nikkei, you know, whatever, the FTSE, you name it. You get global equity markets under pressure that tends to weigh on the emerging market currencies. Now, if I go to the S&P, I'm gonna tell you, we closed the week above 2,700. And frankly, we're above the 618, well, right at the 618 retracement here. And the market is continuously climbing this wall of worry. And we're back above this, you know, you guys have heard me reference this trend line, this broken trend line. We're back above it again. And I have to say, I'm not bearish equities right now. Equities look like they could go higher. And, you know, the S&P looks like we can at least see the 200-day moving average, which is 2740, and maybe even, you know, take us up towards 2800 again, towards some of this resistance that we saw back in the fall of last year. Now, if the equity markets continue to rally, that's not going to that's not going to help my case with a higher U.S. dollar Mexican peso exchange rate. Matter of fact, that should ultimately weigh on the U.S. dollar Mexican peso, and it should move lower. So what I'll be watching really closely this week, because I am trading the U.S. dollar Mexican pesos, I'm going to be watching how U.S. equities and global equities really react at current levels. They continue to look strong and very resilient. Nice V-shaped recovery off of a multi-decade trend line here. I say, well, not multi-decade, multi-year. Since the bottom of the GFC, or Great Financial Crisis, when the S&P hit the lows at 666. I mean, we've rallied right off of that trend line. So nice equity market rally, and I don't know if it's over yet. So I don't. All we need is a positive comment from the U.S. and China on trade, and we could trade significantly higher. And I think that's a continuous risk in the markets as this trade war continues to draw out. And remember, you're going into the end of March when the 90-day tariff ceasefire expires. So the further the closer we get to that date, the more likely there is for some sort of trade deal to be put together. So anyway, those are kind of the things that I'm looking at this week, and I wish there was more to report on the majors, especially with the euro and the dollar index. But it is what it is. We're kind of faced with the market that we have to deal with the market that we're dealt with right now, and it is more of a range-bound environment. So guys and gals, my name is Blake Morrow, and if you found this video helpful, entertaining, enlightening, click the thumbs up button on YouTube, please. It makes us feel better about producing these videos for you. My team that works tirelessly behind the scenes to make this all happen makes us all feel better. And then also subscribe to our YouTube channel so you don't miss any of our wonderful interviews that we do, or if you miss a live face interview or face analysis that we do every day for free, and you miss it because you weren't around, at least if you're subscribed to our YouTube channel, you don't miss any of the analysis that we did on the markets. So subscribe to our YouTube channel. All right, guys and gals, my name is Blake Morrow. You've been listening to the Week Ahead video. Have a great trading week, and I'll see you tomorrow morning on the free face video.